So, in the United States, we have a system of taxes that is voluntary compliance. That is that pretty much everybody hates paying taxes, but we all do it anyway because we know that we need a country infrastructure like, roads and bridges and firemen and police officers, and that's what all the taxes go to pay for. Yeah.
Is it smart to actually have somebody do it for you and pay, like?
Depends on your situation. If you're a very simple tax situation, like you're a single taxpayer, you have no deductions, you don't really need to have somebody pay, because
some of them take like $300-400
right.
for doing it.
If you have a lot of deductions and some of your deductions, because some things are deductible and some things aren't, and you need somebody to help you go through all that. If you're self-employed, you own your own business, then it's a good idea to have somebody help you. So it depends, like I said, it depends on your situation. If you just are a regular employee and you're single, then you can do the 1040 EZ, and it's very simple, and you don't make any mistakes on that if you report, here's my income, here's the taxes I paid, this is what I owe you or you owe me, period. There's not a lot to that. So it's hard to make a mistake on that one. But then if you're talking about the 1040, which is what we're going to go over today, and there's a lot of different things that can and can't be deducted. And if you're self-employed, you own your own business, there's, if you run a business out of your house, there's certain laws about how much of your house can be deducted as a business expense. And so when you're talking about things like that, then yeah, it's a good idea to have somebody do it for you, because you don't want to do it wrong and then be penalized later.
When you get a deductible on your house for having home business, basically, does that lower your mortgage?
No, it just lowers your tax bill. So the 1040 is the long form. So we have the 1040, the 1040A, and the 1040 EZ. We started them backwards because the 1040 EZ is the easiest. It also has the most restrictions on it about who can use it. The 1040A, anybody can use it, but you can't itemize your deductions. So the 1040 EZ you can only use if you're singled or married, filing jointly, and you can't have kids, and you can't have deductions, and you can't have income over a certain amount, and you can't have bank interest over a certain amount, and you can't have stock dividends over a certain amount. 1040A, anybody can use it, no matter what your filing status is, and you can have any kind of income and any kind of interest or stock dividends, but you cannot itemize your deduction. And then 1040 is the long form, and that's the one where you itemize your deductions, so you can list everything on that form. And that's what we're going to talk about today. And in conjunction with the 1040, there are forms A through, I want to say, I think they go all the way through Z and then some double letters. But most of those will not pertain to you guys. Yeah.
How do you find out which forms you need and how do you get them?
They're all available on the IRS website. And the forms that you need depend on like your situation, because there's a form for farm worker income, or there's a form for people that worked in a special. There's all kinds of different specialized forms that 90% of the population never have to look at.
You just have to look through them and figure out which ones you need.
Yeah. Or this is the time where you'd hire a tax professional and have them look at it for you. Your deductions, the way the deductions work is, you know how we had the adjusted gross income line on the 1040A? The deductions come after that adjusted gross income, and they are subtracted from your income. So they lower your taxable income. And some things that are deductible are a percentage of your medical expenses, alimony, if you have to pay alimony, if you pay property taxes, that's deductible. If you pay state or local income tax, that's all deductible. Casualty or theft losses, so if you're robbed or if you lose your house or your car in a wreck or whatever and you have losses, that's covered. Moving expenses, not all expenses on the move, but certain expenses on the move, yeah.
Are your state and federal income taxes deductible from each other?
No. State income tax is deductible federally, but federal tax is not deductible on a state level. And then charitable donations. So if you give money or items to charity, you can deduct that. If you have to go look for a job, and you know how we had talked about paying for employment agencies and things, and resumes and all that. So if you pay money for resumes, that's deductible. If you pay for an employment agency, that's deductible. If you have to buy a suit to go to job interviews, that's deductible. So job seeking expenses. If you have to travel to go to an interview like out of state or something, you can deduct the airfare and the hotel to travel.
Is gas for getting to work?
Gas for getting to work is not deductible unless you are an independent contractor. And then it's not gas, it's mileage, and it works out, there's like a calculation for that. But that's all under the self-employment forms that you'd have to fill out. So it's a little different. And then the itemized deductions go on the Schedule A form. Okay, so we have deductions, and deductions lower your income. And then you have tax credits, and tax credits lower your total tax. So the deductions happened first and lower the income, and then you find out how much tax you owe on the new income, and then the tax credits get subtracted from that amount
So
if you
it's
qualify for them.
It's on that day.
No, maybe. I don't know. The tax credits periodically change, so I've not bothered to learn them all. Like as far as the requirements, I mean, the child tax credit has been around forever. The earned income tax credit has been around forever, but as to the amount of people in your household versus the amount of income that is in your household and things like that changes periodically. So I don't know the current restrictions, but they're very specific. The tax credits, you have to meet the specific criteria as set out to earn those credits, and then there are different levels. So depending on, like for example, the child tax credit, depending on your income and how many kids you have and all that factors in to determine how much your tax credit is. And there's a form 8812, I want to say, hold on. Yeah, a child tax credit is form 8812. There's a earned income credit. There's a form called the Schedule EIC that you fill out to determine if you qualify or not. Yeah, so the tax credits are very, like there's a American Opportunity Credit, that there's another form 8863 that you have to fill out to determine if you've qualified for it. You know, and they have that information on the back of the 1040, so we'll go over it. But so the tax credits are very specific as to whether or not you get them, and then exactly how much that is, and there's calculation forms to fill out for everything. Now, tax avoidance is legal. Tax avoidance is being truthful on your tax return and using your deductions and your tax credits to reduce your tax bill. That's totally legal. Tax evasion is a felony. Okay, and the difference between tax avoidance and tax evasion is avoidance is doing legal things and telling the truth and using deductions and credits, and evasion is lying. If you lie about your income, so you hide income so you're not paying taxes on it, if you lie about your dependents or your deductions or your credits or anything like that to not have to pay taxes, that's tax evasion and it's a felony. That's like we hear about those people that have like bank accounts in the Grand Caymans and they're not traceable and all that. Those people are practicing tax evasion. They do not want to pay taxes on that money, and that's illegal. And when they get caught, they get in a lot of trouble. Yeah.
What are reasons you audit?
So we're going to look at some different examples of filling these forms out, and we've got Margaret and Brian O'Sullivan, and they're married, and they have one child, Carol. Margaret works for a cable television, and Brian is a cameraman. Okay, so they have combined wages, interest from a bank, interest from another bank. They have stock dividends from GM, stock dividends from Kodak. Margaret won 300 in the lottery. And so to figure all this out, we're going to fill out the 1040 and the Schedule B. And the reason we don't have to do a Schedule A is because we're not listing. Actually, that's not true. We are doing Schedule A. So we're going to do a 1040, a Schedule A, and a Schedule B. Okay, so this will be a typical family situation where you'd have to fill out a long form. But okay, so you have the 1040 is the first form. This is the actual form that you fill out in 2012 anyway. Okay, so that's the 1040. It's double-sided. And we're going to go through this step by step. And then the Schedule B, which is interest and ordinary dividends. So we're going to need this form. And the Schedule A, which is our itemized deductions. Okay, so we'll need all three of these forms for this one example. All right, so if we look at Margaret and Brian O'Sullivan, so that's what we're going to do first is fill out Margaret and Brian O'Sullivan. So okay, now if you were actually filling out your actual tax form, of course you're going to put your social security number here, but we don't have their social security numbers, so we're just going to put zeros. Is that better? Okay. And you fill out your home address. If you live in another country but you're a U.S. citizen, you have to pay taxes, so you have to fill this out. Yep. U.S. citizen, you have to pay taxes in the United States.
So like if you said if you live in a country,
Mm-hmm.
so like if I moved to Africa, I still need to pay taxes.
Mm-hmm. As long as you maintained your citizenship, yeah. Yeah. Okay, so they are married filing jointly. Okay, so we're going to click that one. Now, this is a little different on this form versus the other forms. Like if you were a single person filing head of household, you have to put that person's name here, even though you put it also down here, you have to put it in two places. So if that's ever your situation where you're head of household, so you're not married, but you have a child or another qualifying person, so like an elderly parent that you care for or something, you have to put their name here and down here. Oh wait, sorry, is a person, I read that wrong, but not your dependent. Enter this child's name. Sorry, this is if you have somebody that's not your dependent.
That lives with you?
Yeah.
Your roommate?
No, child, but not your dependent. So an illegal, no, like a not legally your dependent. So like, let's say your niece or nephew that you're taking care of, but they're not legally your dependent, but they're a family member and you care for them.
So what exactly is dependent?
So like if both like if say both my parents like say I went to live with my aunt, and my aunt and uncle would be down.
If your aunt or uncle were taking care of you
Yeah.
and they were paying for your expenses and everything, but they were not your legal guardians, you are not technically their dependent. But it wouldn't have to, it would have to be just your aunt or just your uncle, because to be head of household, you have to be single.
Oh yeah.
So, but like a dependent has a legal relationship with
So
you.
if I went to live with my aunt, would I be like
Yeah, she'd put you up here. Mm-hmm.
What if your other kid who's like 19 and works and can support himself but still lives with you?
They can't go here anymore. Once again, They have one child, Carol. Oops. Go ahead and close that. Sorry. They have one child, Carol, so we're going to put her down here. And I'm going to go ahead and assume her last name is also Sullivan. And she has a social security number. And she is their daughter. Okay, and we're going to assume she's under 17 because they didn't say otherwise. Okay. Now, we've got ourselves and our spouse and our kid. So we have on this side for our total number of exemptions, we have boxes A and B. And then we have one child that lived with us, so that's 3 exemptions. Any questions on that part so far? If you have more than 4 dependents, you click this box here, and then there's instructions. There's another form that you have to fill out. There's always another form. If anything different goes on another form. So there's a form for a total number of like extra dependents. Okay, so we have the wages, salaries, and tips. And they had combined wages here of $76,521. So that goes right here. Okay. So we're in the income section. Now it says attached forms W-2. If you're doing paper taxes, you have to mail in a copy of your W-2s attached to this. If you're doing electronic, you don't have to mail them in, but you have to keep them. You're supposed to keep your taxes on file for 7 years minimum, because you could be audited anytime in that 7-year period for previous years. So you're supposed to keep all your records for at least 7 years or more. I recommend 10 just to be safe. Okay, taxable interest attached Schedule B if required. Now, if you only have one bank, you can just put the amount here. But they had 2 banks, right? So we had Seaford Bank and Buffalo Bank. So we have to do a Schedule B. So we're going to go to our Schedule B form, which looks like this. And you have Part 1 and Part 2. Part 1 is interest, and Part 2 is dividends. So this is bank accounts. And this is stock dividends. Okay. And what you do is you list each bank on a separate line and the amount. So they had Seaford Bank, which was $812, and Buffalo Bank, which was $877.
This is interest on the money
This is like bank accounts. So like savings account or CD, money market, something like that. Okay. So you list all of the banks, all of the different amounts of interest. These will have come on a 1098 form. So you'll get a 1098 in the mail from your bank that'll tell you how much interest you had that was taxable. Okay. So we'll add those 2 amounts up down here at the bottom. Okay, so $1,689. And we carry that over to 8A, where it says taxable interest attached Schedule B. Okay. Schedule B is if more than one bank. Yeah, certainly. Yeah. So you only have to use Schedule B if you had more than one bank. Is that part okay, that you understand when you have to use the Schedule B? Okay. So if you have more than one bank, then you fill out the Schedule B. Do you need me to go back to the Schedule B? Anybody?
So what if, like, you have a kid that goes to college
Okay, tax exempt interest. This is interest that won't be taxed, and there are different qualifications for this, but you will know from whatever when you open the account if the interest is tax exempt or not. So right now we're just going to put a 0 there. Okay. Ordinary dividends, attached Schedule B. Again, if there's more than one company, you have to put them on the Schedule B. So let's go back over to our, and we have GM stock and Kodak stock. So we're going to list those here under ordinary dividends. With GM stock, which was how much, 444? Yeah, 444. And then Kodak stock, which is 1200. Just double check that. Okay. So we're going to add those up. And those go back on the 1040. This total goes on 1040. Okay. So I'm going to put that on this line right here. Now I just want to come back here. Foreign accounts and trusts. If you have any account that's in another country, like a bank account in another country, you're supposed to fill out this form. And it says if you have over $1,500 of taxable interest or ordinary dividends, had a foreign account, or received a distribution from or a foreign trust, you're supposed to fill out this section. Most people will never have to fill out this section because most people don't have financial bank accounts and things in other countries because it's hard enough to keep up with the ones you got in this country, right? So most people won't have to do this, but you just say yes or no. And then if so, like it says like, oh, if yes, then you need to fill out this form, or yes, you have to fill out this form. So, you know, it gives you directions on what other forms you might have to fill out. Most of you will never need this part. Just these two, the interest and the ordinary dividends. And once those two sections are filled out, the Schedule B is now complete. This is done. So we're just going to set that to the side. That'll get stapled to the whole thing when if you're mailing it in, you put it together and you staple it. Okay, so qualified dividends, we're not going to worry about that. Taxable refunds, credits, or offset of state and local income taxes. If you get a state income tax that's taxable, you'll get a form, another 1098. We didn't get that. Alimony received, they're married, so there's none of that. Business income or loss, and I didn't remember that, but let's just look. State income taxes, real estate taxes, flood damage, okay. So no business expenses. So that's going to be zeros. If you do have that, there's the Schedule C for business expenses. Capital gain or loss, this is also if you had business expenses. Other gains or losses, we're not going to worry about those. IRA distributions and pensions and annuities, this is only after retirement that you would have to worry about this. You're not going to get any of this until you're retired, right? Because pensions and retirement accounts pay out when you are retired. So this section you don't have to worry about until you're like 67 or so. Real estate, if you rent real estate, if you have royalties, which is like a kind of commission, right? If you had a partnership, you have an S corporation, a trust, or anything like that, you have to fill out this Schedule E and report that income. We're not going to have any of that. Farm income or loss. If you own a farm and you made money or lost money on your farm, you have to fill out a Schedule F, F for farm. We don't have any of that. unemployment compensation. If you lost your job at any point during the year and you were paid unemployment, you have to claim that here. Yeah.
Is the Form F if you work on a farm or if you own a farm?
You own a farm. It's your farm. Because that's the only way you'd have an income or a loss on the farm.
Yeah.
So it's your own farm. Unemployment is only if you received unemployment checks. Then you'd fill out the amount of money that you'll get a form, another 1099. You'll get a 1099 for those. Social Security benefits, if you're on Social Security, so this would only be if you're retired or if you're disabled, that you would have that to worry about. Other income, list type and amount. Okay, well, let's look at this. Margaret won $300 in the lottery. That is other income. That goes right here. So I don't know if you guys remember several years back when Oprah gave like everybody in the audience a car. And then there was a big to-do about it afterwards because they all had to claim those cars on their income taxes. That goes right here. And so it would have been like Oprah car, $50,000 or however much they were worth. I have no idea. But they had to claim it as income. Yeah, because then you have to pay income tax on a car that you won because you went to see the Oprah Winfrey show one day and you weren't expecting it, and now your income just increased by like $25,000 that year.
Tax would be that much though. You still get
25%.
Still, just free cars. 25.
Yeah, but then you have to have the money to pay that tax bill because you haven't been paying that much taxes because you've been paying taxes on the income you've actually been earning. And now suddenly your income increased by $25,000.
Yo, that's crazy.
And you're paying approximately 25% of that in taxes. That's a lot of money. Yeah, it could be a problem. People were mad. Basically, yeah, people were really mad. Okay, so then we're going to add up all of these numbers to get our total income. And I'm going to pause. Yes. Yeah. You have to claim the any winnings, any lottery winnings, any sweepstakes winnings. If you go on a game show and you win items, you have to claim the value of those items as income. So you win a trip to Paris, you have to claim that as income.
No, you're free to do. What if it was like a unique item, like a custom motorcycle?
There would be a value assessed, and you would have to claim it as income. Okay, so the total income went up to $80,154. Any questions on that part right there? The total income? Huh? Yeah, that's for them both. Okay, so look at the next part. Margaret O'Sullivan teaches a night course at the local college, and she had $133 in educator expenses. Now, right here you have a line that says educator expenses. If you're a teacher and you spend money on supplies for your classroom or your students, you're allowed to deduct up to $200. So however much you've spent up to you do have to have receipts for all that. You can't just write in $200 every year because that's the maximum. You have to prove that you spent the money that you say you spent. But she spent $133, so that goes right there. Okay, you have certain business expenses of reservists, performing artists, and fee basis government officials, and there's those forms. We're not going to get into all that. But like performing artists can deduct like their costumes and makeup and stuff like that because, well, that's part of their job, right? And fee basis government officials, there's different things. Like, so there's different things, and you would find out what you can and can't do right there on that form.
So, like, all jokes aside, Lady Gaga can like deduct money because of the crazy stuff that she does.
Yeah. Okay, health savings accounts deductions. If you have one of these, you've got to fill out that form. I'm just going to double check, but we didn't have any of that. But we did have $3,009 of moving expenses, which came on the next line. Now look here. We're not going to do this form today. But if you have moving expenses, you have to fill out this form. If you were actually going to file this, it's a very straightforward form. You just have to show, like, okay, this is the truck rentals, this is the movers, pay for movers, this is boxes or supplies. It's very straightforward. But you would fill out that form and attach it. Okay, they're not deductible part of self-employment tax. Attached Schedule SE. We don't have that. They're not self-employed. No self-employed, no self-employed. Penalty on early withdrawals of savings. This is for retirement savings accounts if you have a penalty for early withdrawals. If you pay alimony, this is where you can enter that, and you have to have your ex's social security number because you have to put that in there, because if you're paying them alimony and you're claiming it as an income deduction, they have to be claiming it as income because that's what it is for them. So if you have an IRA, if you have student loan interest is deductible. So any student loan interest you're paying gets deducted.
So the annual?
Yeah, annual interest. And then tuition and fees, any tuitions and fees you pay out of pocket is deductible. You have to attach this form here. Domestic production activities deduction. If you own your own business and your business is that you produce things, because so many things are not being produced in the United States anymore, they now allow deductions for that. Okay, now we're going to add these two lines, which I should be able to do in my head, but I don't feel like it. And that goes right here. And then we subtract this line from that line to get the bottom line, the adjusted gross income. Okay, so just from moving and buying stuff for her classroom, they were able to reduce their income from $80,000 to $77,000.
Isn't that like what they made one more and stuff?
Yeah, it's a little bit more than they made before the lottery and the interest. So it's kind of nice to be able to reduce your income by that much. And depending, like if you had these other things, you could reduce it even further.
Yeah.
So like, if you're paying student loan interest, or if you pay alimony, or if you have, there's different ways to reduce the income. So that's kind of nice. Okay, so any questions on the front of the form so far? Once we've got this, we take this number, 77,012, and we bring it over here to the top. Okay. Again, we have if you're born before January 48 and you're blind, you check these boxes. We're not doing that. If your spouse itemizes on a separate return, or you're a dual status alien, you check here. Now, this is if you're married filing separately, or if you're a dual status alien, which means you have like dual citizenship. Like I'd say I'm a citizen of this country and England or something, then I would have to check here. Now, itemized deductions, this is where we go for our Schedule A, or you can use the standard deduction. They're married filing jointly. So to determine if they want a standardized deduction or itemized deduction, the best way to do it is to go ahead and make your itemized list, see what the total is, check out that number, and see which one's bigger, and use whatever number's bigger. Okay, so we're going to stop here today, and we're going to do the itemized deductions for Schedule A tomorrow. So you don't actually have homework tonight, but you will have the homework tomorrow night. Okay, so just look this over and see if you have any questions, and we'll go back over it tomorrow.